There is something slightly strange happening in markets right now. They are rising at the same time as the risk hasn't gone away. Oil spiked above $100 and then quietly dropped back below it. Bitcoin fell, then climbed to a local new high, and equities are now pushing back towards record levels. Not because the situation has improved, but because markets are starting to believe that it will. Over the past 24 hours, global markets have begun to stabilize despite the ongoing tension between the US and Iran. Oil has pulled back towards the mid to high $90 after briefly surging on escalation fears again. Equities have rebounded massively, with the Nasdaq and S&P 500 moving 500 points higher again yesterday, and Bitcoin, well, has pushed towards the 75k level again as well. Now, that combination is not random. It tells you something very specific. Markets are no longer reacting to what is happening. They're reacting to what they think will happen next. Earlier this week, markets were reactive, of course. Ceasefire announced, risk was back on. Ceasefire breaks down, risk off again. Oil up, crypto down. Pretty simple stuff, really. But now that relationship has changed. Because instead of reacting to headlines, markets are beginning to anticipate outcomes, specifically the potential return of negotiations again. Reports suggest that talks may resume and that both sides remain open to diplomacy. And that possibility alone is enough to move markets, as we have well seen. Obviously, oil, I would say, is the most important signal right now. When escalation fears peaked, oil surged aggressively above $100. But now, it is no longer accelerating at all. It's drifting, even falling slightly as traders begin to price in a low probability of disruption. And that shift matters, I would say, because when oil stops rising, inflation expectations stop rising with it. And when that happens, liquidity expectations improve, which supports risk assets, including everyone's favorite, volatility generator. Bitcoin's behavior here is particularly interesting. After dropping during the initial escalation, it has now stabilized and begun to push higher again, back towards that mid 75k area. Not explosively, but consistently. And that kind of move usually tells you everything. It suggests that sellers are no longer in control, even if buyers are not exactly charging in with enthusiasm right now. Equities markets are showing a similar pattern. Initial weakness followed by a recovery. The Nasdaq in particular is moving back towards recent highs, but this is not aggressive optimism in the traditional sense. I would say it's cautious positioning. A market that wants to be long, it's not entirely comfortable doing so right now. And that is an important distinction because cautious rallies can continue, but they are also quite fragile. Institutional behavior supports this view as well. ETF inflows have turned positive again with capital returning to Bitcoin exposure. At the same time, large players are still active, with major allocations continuing even amid the uncertainty. But the pace is measured, not aggressive, which is usually what happens when people are optimistic but not entirely convinced. And this is where the risk lies. Markets are beginning to price in a resolution, and that resolution has not happened yet. Negotiations may resume, they may succeed, or they may fail. And if they fail, then everything currently being priced in has to be unwound, and that will obviously lead to potential sharp drops in markets in general. If optimism proves premature, oil moves higher again, equities will pull back, liquidity expectations will tighten, and crypto will follow, as it has done consistently throughout this entire cycle. So right now, markets are not trading reality, they are trading probabilities. The probability that tensions ease, that negotiations resume, that stability returns. But until that actually happens, that trade remains vulnerable. For now, Bitcoin is rising, oil is easing, and equities, they're just about holding up right now, having a big rally even. But all of it is depending on something that has not yet been confirmed. And in markets, that often is where the risk begins.